Ray Dalio recently said that people should be allocated at least 15% to Bitcoin and gold and similar assets. He should have just said Bitcoin, in my humble opinion, but we'll take the wins where we can get them. This is a far cry from Rick Edelman saying 40% allocation, but still 15% to gold and Bitcoin, much higher than you would be seeing from anyone else. We're going to talk about this, everything happening in the market and the news. Of course, we've got Tillman and Andrew. But way more exciting than those two lumps on a log is Matthew Siegel, today's special guest from Van Eck. See you guys in a second.
Let's go. Let's go.
You might notice today that we've given ourselves nicknames. Tillman came in as Bitcoin enthusiast, so I had to back it out and come in as an ETH maxi, which I'm not. But I wanted to make sure that that forever lived on the internet as fodder for Bitcoin maximalists.
Well, I am a Bitcoin enthusiast, if you need to ask. So
I think we tried to get Andrew to go XRP maxi, and he refused.
I'm more of a Vineyard Vine maxi than I am an XRP maxi. All right, so let's be clear about that.
What would your maxi be? Is it Node? I mean, HODL, it's a Van Eck fund of some sort.
Matt? Oh, maxis get bloodied. But if I had to pick one, yeah, it'd be Node.
Yeah, maybe let's give you the chance to talk about it because you actually came on the show. I think we even talked on Spaces when it launched. What's happening with Node and everything at Van Eck, obviously.
Yeah, I mean, it's been we launched the on-chain economy ETF in mid-May in a perfect timing, I think, for a crypto equity strategy, and we're going for a lower volatility approach to the space because a lot of the crypto ETFs are designed, equity ETFs are designed to basically be buying the leveraged companies at the top. And we've seen over the cycles how leverage and Bitcoin just don't really go together. So we've got a very wide investment universe. Any company that has a strategy to make money from digital assets is eligible. And when you take that wide approach, you can actually include companies from every single sector, giving the fund a much lower volatility approach. And we think that slow and steady can win the race in a volatile asset class like this. So it has lower volatility than Bitcoin, but beating Bitcoin since inception. I hope we can keep that up because that'll be a sweet spot.
How do you rebalance when 900 treasury companies launch a day?
Well, see, one of our processes here is that we are underweight leverage, and dilution is the new leverage for this cycle. So when you look at, the MicroStrategy weight in a normal crypto equity ETF could be, 10%, and we're at 3%. So it's just a much more diversified approach, and we're not going to have a 10% position in something that we think can have an 80% drawdown. And these treasury companies, I think it's totally conceivable that if there's a bear market, the crypto treasury companies can go down 2x what Bitcoin goes down. So it's about risk management and position sizing.
Yeah, but we're like in a super cycle. There's never going to be a bear market.
You want to take off my hat and show my gray hairs or my no hairs?
I was going to say you're still beating these two. Tillman and Andrew both have great haircuts, to be honest. But let's dive into the main topic here. We've got nothing on the screen for some reason because we just get these moments where things don't work. But here we go. We should be getting. Billionaire investor Ray Dalio urges 15% allocation in gold or Bitcoin. Says world on the verge of an economic heart attack. Tillman or Andrew, either of you can jump into this one. I mean, we've all heard Ray Dalio before, right? We know that he believes that the fourth turning is coming and that we're going to go into mass economic collapse. He did say he likes gold better than Bitcoin in this context. But what do you think, Tillman?
Well, I think that there's going to be an infinite universe of opportunities to hedge against events like that. I think 15%, it doesn't surprise me. I think it was inevitable that we were going to see people come out and say a higher and higher number. I think that that's probably just the beginning. I think that we're going to see in the next 15 years a lot more development in the space than we've seen in the last 15 years. Let's put it that way. And I think a lot of folks are going to use Bitcoin as a new means to financially engineer a path forward that really does a better job of mitigating risk and uses the hardest form of collateral as a debt mechanism. It's the likes of we've not seen before. So the question is like, who will find the sweet spot? What bet will be right? There will be a perfect bet, and then there'll be essentially a bell curve off of that, in terms of whether you're leaving too much on the table or taking too much off the table in terms of that volatility. The old adage is leverage cuts both ways. You're either the superhero and you're really right when you have high leverage on the right side of things, or you are bust on the bad side of things. And that's just the nature of every market. And I think Bitcoin possesses intrinsic qualities that make it exceptionally fun to try to use it as a mechanism inside of engineering. So I think this is just the beginning. I think 15% is probably the tip of the iceberg. I think we'll probably see 50% in the next 5 years.
Andrew.
Yeah, so we've gone in the last 12 months from, whispers across TradFi of, maybe you should put 1% of your portfolio into Bitcoin. And then it turned into BlackRock putting out white papers and research saying 3 to 5% makes more sense. And then, on the wealth management side, Rick Edelman, who's a paragon of that particular space, saying, it's probably more than that. How about 10%? And then he launches a 40% number, which 40% is an interesting headline, but Rick's not out there telling his clients to put 40% of their money into Bitcoin. He's just not. But still, we've gone from 1 to 3 to 5 to 10 to now, Dalio is out there saying, there's a world where 15% makes sense. The way that I look at it is there's a kaleidoscope of asset classes that, people with meaningful capital are told to allocate to, whether it's, overseas equities, whether it's, United States equities, United States debt, emerging market debt, marking this, all this has their, requisite percentages in any portfolio. And at some point, Bitcoin and probably, to a larger extent, crypto as an asset class will continue to move up rungs of, what you should allocate to that particular asset class, right? So I don't know what the numbers are over the last decade with emerging market debt or emerging market equity. Could be a lot, could be not that great. But my guess is that crypto probably outperformed an asset class like that, right? So do we find ourselves, in a spot where, Bitcoin and crypto ends up being about halfway up that proverbial ladder in the world of wealth management and TradFi, and says, okay, this makes sense that 10 to 12% of your portfolio is in a quote unquote emerging market type of finance that is crypto and Bitcoin in particular.
Matthew, what percentage would you put it at if you were, financial advising?
I think Ray Dalio has been reading Van Eck research here, because we put out a piece in June 2024. We did this Monte Carlo simulation, and it was aimed at allocators to try to get them to do 3% to Bitcoin. But if you read the piece finally, the Sharpe ratio of a 60-40 portfolio of equities and bonds, and then you start introducing a little bit of Bitcoin to see how the risk and return are adjusted, and you max out the Sharpe ratio right at 20% total crypto. And then we suggested a 3-to-1 BTC to ETH. So maybe Dalio's at 15% Bitcoin, 5% ETH, and he's at that 20% max. But that is a very volatile, that's more than most people want. So most of our conversations with advisors and allocators are still kind of in the 50 basis points to 2% range. And I think we'd need to see BTC vol here in the mid 20s for a year or so before folks would, bump it up to the 5 to 10%. I don't think we're going to linger here for long.
20% works really well if you're not a human with emotions and you can just shut it off for 10 years. And, most people are going to puke that portfolio on the first 30% drawdown, unfortunately, even though the math tells them they shouldn't.
Agree.
So since you're actively allocating, I have to imagine that you're looking very closely at this Justin Sunback Tron TRX treasury company that's filing for 1 billion shelf statement with SEC. Are we going to get a treasury company for literally everything, Matthew?
Yeah, I think basically we will, as long as the Bitcoin stays here in this kind of 117 to 121 range. Equity capital markets are very open. That's the biggest change here, I think, to the markets, is that the investment banks that wouldn't touch Bitcoin and couldn't bank crypto companies are now doing both. And there's some amazing developments in the investment banking league tables. Cantor Fitzgerald is ahead of Goldman Sachs year to date. BTIG is ahead of Morgan Stanley. So the tier 1 banks are getting flipped by the aggressive tier 2 guys that are creating this capital formation phenomenon. I think it will continue to the smaller cap coins until Bitcoin sells off, and then this stuff will close up completely.
So it just unwinds. Yeah.
Well, there'll be no new companies, right? And then we'll play in the existing sandbox. I think some of those will go under 1x MNAV. Then there'll be a bifurcation between who, kind of draws a line in the sand and says, look, we're not going to dilute below 1x MNAV. We may even buy back stock. Those will be the survivors, and some of the others might be acquired. Yeah. I'm just guessing.
I was going to say the big ones just swallow the small ones, probably.
Yeah,
exactly what I was going to say. But when you look at
like this morning, there's BitMine on the tape, the Tom Lee vehicle, and they just authorized $1 billion buyback. So you get in this weird situation with
and
Bitcoin
Kathy
miners.
Wood doubled down.
Yeah, like some of the Bitcoin miners will have ATMs and buybacks open at the same time, which is a bit schizophrenic from a TradFi perspective, that you're both issuing stock and buying it back on, but they're going to basically just trade their own stock within a range. I do think it's helpful to have some valuation support because why else would a minority shareholder buy, a company below 1x NAV? Doesn't make too much sense.
So interestingly though, when you see an announcement that says, Justin Sun backed billion in TRX, can't we just assume that he's found some tax efficient way to basically exit $1 billion of his own TRX into this vehicle?
Yes.
Okay. Well, I'm just being clear because we have two conversations here. You have Cantor Fitzgerald that's effectively like pivoting their entire business now that Howard Lutnick's gone and his son Brandon is running the show to crypto, much like the Trumps have from real estate to crypto. But then you have these vehicles that it's probably not backed by Cantor Fitzgerald or something. That's simply a way to move money around in a tax efficient way, and then hopefully you get the premium.
Yeah, and there's some diversification to it too. So I don't know the details of this individual, and I don't want to. I want to mention about an individual, but like that some of the folks are essentially swapping discounted coins in return for discounted stock. And diversifying and
the assumption that you get it at a multiple and you effectively get an exit from something that you can't borrow against into something that you can borrow against. And it makes a lot of sense when you think about it.
I don't think it's necessarily an exit. I think it's some of it is truly just diversification, holding it in equity form rather than token form.
Yeah, I mean, that makes a lot of sense, especially for people at a certain age who are estate planning in certain countries and things. I mean, that was the whole Galaxy 80,000 exit, is that the one line they wrote about who the customer was on that 80,000 Bitcoin sale was that they were diversifying for estate planning. I mean, I would love to be in a position where I can diversify 9 billion for my estate planning. It's just a small part, you got to wonder how much more Bitcoin that guy has, or gal. Who knows? But it's pretty wild to see how many things are happening here. I'm going to go on to this story because I think this is absolutely huge, and I didn't see many people talking about it. PayPal to roll out Pay with Crypto feature for merchants. According to Frank Keller, you have globally 650 million users that participate in the $3 trillion market of cryptocurrencies, and PayPal wants to give smaller businesses access to this customer base. PayPal is going to allow businesses to accept more than 100 cryptocurrencies at checkout. Importantly, when you dig into this, the vendor will have the option to have this converted to cash or their local currency on the sale. They don't need to accept coin number 97 on coin market cap as payment and hope that that keeps up with the dollar. These are, maybe this announcement in and of itself isn't huge. We saw Square do this, but Andrew, like, this is just another massive step in the obvious direction, correct?
Well, it's, a lot of times when you still have some quote unquote crypto non-believers, they'll go to, well, all right, other than number go up, what is the use case? Well, PayPal is showing it to you right there. I think what's interesting about that particular announcement is it's 100 tokens, right? So it's not just Bitcoin and Ethereum and maybe one other. It's a bunch of them, right? So I'd love to have been a fly on the wall at PayPal in those meetings, making those types of decisions. But I think what they're trying to do is no different than most of the organizations that are hovering around crypto at this point. How many users can we grab, right? How many users can we, collate around any particular crypto and folks that want to use it for some reason? So that particular announcement is, like you said, it's bigger than people think because of one, you can send, whatever it is, token number 79, you can send it and use it as quote unquote currency. Right?
Sure.
You send IOTA,
send your Arrow Finance or your BitTorrent to buy some,
or send Pendle or Jasmy coin. So again, the point is that there's, these are quote unquote use cases. And, I think I linked to a Matt tweet yesterday that we are again on the precipice. And this PayPal story is just another in a long line of announcements that shows that crypto is absolutely hurtling and dragging TradFi with it to make changes in really, really broad, fast ways. So PayPal is accepting payments in things that even sound absurd to the guys on this call who have been in this space for forever. While at the same time, we're mere 18 to 24 months away for there's going to be trading 24/7. Stable coins, the Genius Act is going to push that forward. All of these changes are coming, and you're seeing large institutions get there a little bit quicker than we thought they would. What Matt just said about some second-tier investment banks being ahead of Morgan Stanley and Goldman Sachs in terms of deal flow this year, that is a huge deal, because Goldman Sachs and Morgan Stanley will want to catch up. And even if they have to hold their nose and play the game with Bitcoin treasury companies or ETH treasury companies or who knows what treasury companies or IPO adjacent to crypto, whatever it happens to be, they will do it. They absolutely will do it. So the wave to me is just starting. And I don't think we've gotten to bubble territory. I think we've got some real space and room to run here as it relates to TradFi doing a lot of stuff. Never underestimate the ability for investment banks, and just traditional finance to be wildly creative in ways that we didn't think they actually would be. We're going to see that here over the next 6 to 12 months.
I mean, should I be worried, Tillman, when I actually look at this chart? First of all, now I'm an Arrow enthusiast, in case any of you were wondering, because I like number 99. But so we can be concerned that the top 100 coins all have over a $700 million market cap.
Listen, there's a lot of excitement in the space, to say the least. Market caps don't mean anything. That. At the end of the day, it's what liquidity can be pulled out of that market cap. And some of those coins are very illiquid, and some of them are highly liquid. And I think that's the beauty of the last 15 years, is that we have kind of seen what works, what has a primary place from a use case perspective. And some of the coins that, like Bitcoin and like Ethereum and Solana, are coming out with absolute clarity as it pertains to their use case. And that's why retail, and that's why Wall Street has really piled on and found it a firm foundation by which they can build on. And if you look at kind of the price of Bitcoin, you can correlate it to a lot of different things from a power law perspective. But the one that I find most interesting, and the one that I think has the strongest correlation and the least deviation, is the wallets over $1,000. So if you just look at PayPal and you say, okay, what does this mean? Well, it means a lot of integration. It means a lot of new users. It means a lot of new wallets over $1,000, and that means price go up. And so what are we seeing? Well, we're seeing that the crypto space as a whole has a utility to Wall Street in the fact that it allows them to get new users at a rate that they've not seen before. And it allows those users to be more active than they've ever seen before. And it allows them to project a bright future of growth like they've not been able to do, in recent years. And markets are, traditional markets, some of the futures markets are surprisingly thinly traded. And if you look into the crypto space and the demand that's there for it, the depth of liquidity, not only from retail, but now from corporate balance sheet companies, treasury companies, sovereign nations, all the wallets are just getting bigger and bigger that are attached to those buys. The depth of liquidity is getting bigger and bigger attached to the market. And that, I think, is indicative of its intrinsic advantages over the traditional markets. It's highly liquid, instantly settled. There's a new coin that can be popped up any day of the week that represents a new brand that has new growth potential. Like, there's just a lot of sizzle around this stake, and I don't think it's going anywhere anytime soon. I think we're actually in the beginning. I liken it to this analogy. We just got over the Nevada state line and we're in the first gas station, and we're all huddled around 5 10-year-old slot machines going, this is incredible. Can you imagine what we could do with this technology? Vegas isn't even there yet. Like, we haven't even seen the ecosystem that is going to be built off of this vertebrae, in my opinion. So I think we're right there. We're getting to watch it.
I think we lost Matt right when I was about to ask him a question. Bye, Matt. Bye. We'll miss you. I wonder what he was. I think he actually left so he could come back with a cool title.
Yeah, he's a Pingy enthusiast. Pingy? Didn't Van Eck have a
Pengu?
Pengu something? I don't know.
Those are pudgy penguins. Do not.
Yeah, pudgy penguins. Yeah, pudgy penguins. Yeah. They had a pudgy penguin when they were ringing the bell at the NASDAQ.
That was Bitwise. Bitwise is I think Bitwise still has a pudgy penguin as their Twitter. Matt's back. We got him back.
I don't know.
You came back. Guys. I was like, dang, Matt got a really important call, or he really wants to be a
I
Pengu
just suddenly my screen went poosh. But I did have like a couple things to say on the PayPal discussion, because I noticed PayPal's down $5 in the pre-market here on another squishy earnings. Like, I feel like that company is just not gaining market share in any of its many businesses, and it's in a highly competitive space. And when you look at the amount of balances that customers keep on their Venmo or Cash App, it's relatively low. So they have doubled the PYUSD market cap, the PayPal stablecoin, from 500 million to $1 billion this year, but it's just not really moving the needle. Like, I'm much more interested in someone like Interactive Brokers, IBKR, which yesterday for the first time said that they are looking at rolling out their own stablecoin to make it easier for customers to move balances on and off the platform. They're going to be widening the number of coins that they allow customers to access, and probably going to do so at much narrower spreads than Robinhood and Coinbase. So here's a $100 billion company making some aggressive moves after legislation was passed. I think they're going to be a price leader in this space and really help onboard some of the smaller institutions who've stayed away from touching coins.
I think it's literally impossible at this point to keep up with the small stories that should be huge stories.
Well, the Interactive Brokers is not small. Interactive Brokers.
No, I know, but I'm saying it's a small story because there's apparently bigger stories that are in the news. That was not even on my radar. I mean, this one is. FIS partners with Circle to offer bank stablecoin payments. Matthew, I know you got to go in a couple minutes, so I'll let you jump in on this one. We had the news, I think it was last week, about PNC and Coinbase, right? Clearly, everybody wants in on stable coins one way or another, but this seems to be the new approach, is just partner with a stable coin issuer or Coinbase, who we can say as a proxy stable coin issuer, and don't build it yourself. And we have Bank of America and Citibank and others building it themselves.
Yep. I mean, so if Circle stock is going to work, they need a lot of announcements like this where other branded companies are using them on the back end in like a white label type of fashion. And then it'll come down to the economics, how much of that of the interest does Circle keep versus their partners. It's a much more competitive space. We're also competing in it with Agora, the AUSD stablecoin, which we're looking to white label. And I think what you'll see is Circle having to pay up for these types of deals, bringing their margins down and making it tougher to justify the stock at these levels. But it's good to see them winning these deals, and I think they're going to win a lot more.
Coinbase makes more money on USDC than Circle, right? So
if it stays on the
not
Coinbase
like we have
platform,
no precedent. Yeah. It's not like we don't have some sort of precedent for that sort of activity. Listen, you said, as you mentioned, you guys have a stable coin that you've built and you're working on. Generally, what happens to this Cambrian explosion of stable coins if we go back to ZERP? Like if we have zero interest rates and they can't just buy treasuries and make 4 or 5% passively, and what happens if we have zero interest rates?
Well, if we have ZERP and Bitcoin's at $1 million, not financial advice, then the balance of stable coins will also be quite a bit higher. So I still think Bitcoin moves the entire space, creates wealth in the space, and then that some of that wealth gets parked in dollars. We'll see if that. I guess it's decoupled a little bit, but I still think that's the base case.
Makes sense. Matthew, any final thoughts before I let you go in 1 minute?
I wish I had a clever name like you guys, but I will think of one for next time. And
you had your chance on the comeback.
I know. Good to spend time with you all.
While you guys were, I'll let Matt go. Thank you guys. Give Matt a follow. One of the best in the space. Appreciate you, Matthew. Thank you.
You changed it to Tillman enthusiast. I didn't see that.
I figured out how to change them without. I figured out how to change it without leaving. You go over to people and then you click on the 3 dots. And see, guys, I have really bad ADHD. I'm sure you've all noticed that who are here. Yeah. I can do 7 things at once. Yeah, I can literally do my taxes while hosting a show. But today I was doing a deep dive into how to change my name while you guys were talking about stablecoins.
Gracious, that's outstanding.
Well, I needed to be an Aero Maxi at least for 30 seconds so that somebody could clip that.
Yeah. Tillman enthusiast is that's really well done, Scott.
I'm really enthusiastic about Tillman today. Last week Tillman fell off a dock or something.
Yeah, he did.
I did. I couldn't show you my bruises. They were pretty bad though.
Tillman, man, you find creative ways to take L's.
Yeah. It's called getting old. I'm half the man I used to be. There was a very small little gap I had to jump, and I thought for sure I was going to stick the landing, and
you did it to yourself.
I missed the whole dock and went straight into the water and landed on rebar, not rebar, but red iron that holds the boat. So it wasn't.
Oh, that could have gone so much worse.
That's what me and my kids and my wife have been talking about. Don't do as Dad says, not as he does.
Yeah, or just do it better than Dad because
correct. That's exactly right.
Because your legs work because you didn't play football for all those years. Okay, well, back to the talk about markets and everything else that's going on. I would like to ask you actually the same kind of question, just continuing that stablecoin conversation, because they're amazing when they want to buy treasuries, and treasuries are at 4 or 5%, but 1% wouldn't be that sexy.
The thing that crypto is going to have to figure out, and they're going to have to deal with, and they're going to have to adjust to, is that once you effectively co-opt the TradFi world, your pricing power essentially goes to almost zero. Like you don't have the ability to generate outsized fees in that space because fees it's been ground down to almost nothing in the space. So crypto is going to have to figure that out. Stable coins are going to have to figure that out. What does their business model look like? And in the end, it's like no other industry. You'll have 3, maybe 4 that completely dominate the space, so they have a smidge of pricing power, and that's what everybody uses. But we're a long ways from that. There's a gold rush associated with what's happening in the cross-pollination of the two worlds, that we could spend 3 hours on the next podcast talking about, whether it's exchanges, whether it's banking licenses, stable coins, PayPal, whatever it happens to be. We could never stop talking about it. The what's going to happen over the next 2 years as these sort of industries collide.
Well, and there's always another lever to pull. There's a new train that leaves the station every day, and you can get on the opposite side of every trade, right? There's two sides to every trade, and if there's cheap money, which I think probably we can all agree that there is going to be a lot of cheap money that we see in the next 2 years. Interest rates are going to fall. Printing presses are going to be, active. That's going to allow for that money to find smart homes, right? That's just a consolidation equation, and it takes time for that money to consolidate to its rightful owners based upon free markets and based upon goods and services being traded, all of the means and mechanisms by which cash and liquidity gets injected into the market and saturated down to its fullest extent. And we're about to see that I think means the number is going to go up for a long period of time. The sustainability of that has always been in question. It always will be in question. It always is a dance of growth and sustainability, because those are competing interests. You cannot go up forever. And so what does a controlled upward move look like? And what do those drawdowns look like? The stable coin, I believe, has so much growth potential attached to it, and us leading the world, I think it strengthens the dollar regardless of whether it's...
Nobody wants a peso-backed stable coin.
That's what I'm saying. And I think that if the financial ecosystem that is the United States rallies behind the stablecoin technology, we're going to see a resurgence in desire to bank in America, I believe, and to do deals in America. And what I think is the most hopeful thing, based upon what we've seen in the crypto space to drive economic growth, is the amount of capital dollars that are looking to find a home in this space. I mean, you could have told me a year ago that the inflows would have been in the ETFs what they were, and I would have said, no way, it's too much. You could have told me a year ago that the inflows and the amount of debt capital that's been raised in the treasury side of things would have been what it is, and I would have said, not a chance, way too high of a number. Every single number that you can attribute as a KPI to the growth of this industry is going up at a rate that is unpredictable, that not even the brightest minds in TradFi and our space can go, you know what, this is the growth curve that we can expect over the next 2 years. And so when you have the president of the United States and their entire family pivoting, like you said, from real estate into crypto and building a financial firm that is rooted and built on crypto, you kind of gotta wonder if we're at the beginning phases or at the end phases of this bull run. And I think we're probably at the beginning phases based upon that indication. And I think, I would expect a lot more mergers and acquisitions. I would expect a lot more growth capital being injected by VC firms. The 90% of the TradFi market still doesn't even understand what anything is behind Bitcoin, and they really don't even understand what Bitcoin is. So, we got a long way to go is the point.
Yeah. There's a really interesting article before we dive into Arch Public stuff. Wall Street is rewriting the rules of Bitcoin trading. I said something effectively like that recently, and it didn't go great for me because I used the word co-opted, which is why, Andrew, I said, don't ever say co-opted on my show. It's very triggering. But really, really interesting. You look at these charts. I mean, the bulk now of trading is happening. There's a chart here somewhere during US hours, never been as dominated before. A lot of this is because of the options action on IBIT, which is really unprecedented. Here you go. It's highly unusual for an ETF to develop an option market of this magnitude ever, let alone 8 months after launch. So it seems that Wall Street, or at least Wall Street hours and firms, don't have a grip on Bitcoin per se. They said is seizing control of Bitcoin center of gravity, but definitely have a grip now on Bitcoin trading. And I think Gemini kind of proved that this week. I mean, not Gemini, Galaxy. Sorry.
Yeah, there's going to be. This is one of the reasons why we're going to end up at 24/7 type trading, because they're going to want more and more and more of this, right? So this is an entirely new business line for them, let's call it. And as movement goes away from crypto exchanges and into places like this, more and more TradFi institutions are going to want to get their hands on it. And there's a reason why JP Morgan came out last week and said, yeah, we're actually giving some real thought to lending on crypto. They didn't even say lending on Bitcoin. They just said lending in crypto, right? Because we're in this bubble of crypto, and so we see all these things get announced one after another after another one. It's like Scott Melker ADHD. We're just trying to keep up, right? But when you hear JP Morgan talk about crypto lending, and then a week later you see PayPal is going to allow people to pay with 100 different cryptocurrencies, there's a little Venn diagram going on there, right? Like, they see that there's opportunity of scale associated with not just Bitcoin and let's call it Ethereum, that there's lots of money across this asset class that they just haven't tapped into yet, and they're going to figure out ways how to tap into it. No, there isn't a TradFi institution that isn't looking at the volume on IBIT options and saying, holy smokes, okay, we didn't see this coming. What are we going to do about it? Right? What are we going to do about it? And it's not going to slow down, right? It's just simply not going to slow down. So I've said for 6 months now, the stuff that we're going to be talking about on this show in 2 years is going to be radically different than the stuff we talked about in the previous 2 years, like radically different. And it's going to have to do with, one, traditional finance and what they've created, what kind of monsters have they created around this asset class? And then who are the new creators that have become significant players in this space that have either gobbled up TradFi companies or have been gobbled up by TradFi companies? It's just it's fascinating, honestly. It really is fascinating.
I changed my name again.
Tillman and I are over making salient points that are very important, and you're just playing games with your name.
I did it right at the end. Hey, do you remember Hot Shots Part 2?
Yeah,
the movie Hot Shots and Hot Shots Part 2. Yeah, whatever.
I don't think there was a Hot Shots Part 1, right? That's how it was funny.
Maybe. Right? Who knows? Got to talk about this as we get into the Arch Public stuff. We softly totally preempted the announcement last week, but it's official. Red Light Holland teams up with Arch Public for Bitcoin strategy. So just wanted to ping that's happening. Treasury company that I have been advising to buy Bitcoin, now officially using Arch Public to do so. We're going to see that trend, I think, happening massively. How do we get more of these guys to use you? I think I saw today that Galaxy announced that they have like 40 of these that they're executing for.
Yeah. I think that this is the mega trend that we're just starting to see the beginning of. I think, again, the interesting piece to me is that there's going to be highly leveraged versions of this and then unleveraged versions of this. And the unleveraged versions of this are where we're focused because it's real cash. It's not debt money. It's real cash that's attached to NOI, not net operating income, that is constantly being poured into Bitcoin purchases and or some other treasury purchases or balance sheet purchases. So that to me is a big distinction. We're excited about that distinction because there's a lot of companies that are making money that are going, we want to use Bitcoin specifically as a savings bank, as a savings account. And that has so much upside potential with relatively small downside potential, if done correctly, is at a proper percentage against your net profits, it can be exceptionally powerful for any business. And I think that's going to be a wave that we continue to see. And we're working with several companies right now that are going to be deploying this. The announcements will be very exciting, similar to this, but I think that the wave has just begun. And when you start to look at a company side by side with another competing company, the one that has crypto on their balance sheet in some form of treasury and or balance sheet holdings, I think wins the day. I think they're the more competitive, more attractive firm to invest in. So I think that's the main thing that I'm seeing, is this advantage that it gives you in raising money, both debt capital, but also securities backed capital and or NOI backed capital.
So I saw a whole bunch of tweets on Arch Public and around Arch Public about a very specific coin and topic, which is SUI.
Mm-hmm.
Yep.
I know you guys have the SUI strategy. That's how we called pigs where I'm from.
Yeah. That's
SUI. But here, imagine harvesting SUI volatility for more SUI and more Bitcoin, right? And you have the harvesting right here, and it shows this amazing chart. I saw Todd, who we like to mock because he can't defend himself, who works with you, say that he had accumulated 10% more SUI in 1 week. So that doesn't mean he had his portfolio go up. He literally has 10% more of the coin than he did before.
Right.
Correct?
Yeah.
How can you use the algorithm, please tell me, to use SUI to end up with more SUI and more Bitcoin, and SUI goes up?
Yeah, so volatility is happening in every market, right? It's like the rising tide. The tide comes in and it goes out, period, the end. And so if you sit there and you fill up your cup of water when the tide comes in, then you're able to do that with zero effort. And then when the tide goes out, you're left with water and there's no water around you and it looks like magic. Well, guess what? Every one of these coins has exceptional volatility, SUI having even more than Bitcoin. And so as that volatility is bouncing around, if you aren't managing a buy sell strategy against that volatility, you're leaving a lot of that movement potential on the table. And so our strategy allows you to input essentially a take profit mechanism that monitors where your entry price is or where your cost basis is. And when you are in profit and a move to X degree happens, that you're able to sell off a certain percentage of that profitability and take some money off the table. And that is what ends up not only producing cash off of those trades, because every trade that is taken because it's in profit is a profitable trade. But then if it doesn't take the trade, then you're ending up with more SUI because you're buying on those dips and you're doing it in a way that you're going to be accumulating on a very healthy cost curve.
But are you setting it basically so you have these SUI instances and it trades the volatility on SUI, but you also set an instance where it takes some of the profit and mixes the buys for SUI and Bitcoin, hence how you're getting more Bitcoin and SUI?
That's right. So you can either roll the profits into buying more SUI, or you can roll the profits into buying more Bitcoin. I think Todd is, I think he was putting up an example of him rolling it into getting more SUI.
Yeah, he loves SUI. Somebody said there was a great comment here.
Well, listen, the people have spoken.
Funny.
The reason why we added SUI was because it was by popular demand. People were literally commenting left and right saying, please add SUI, please add SUI. And we number one, have launched with Kraken. So if you are a Canadian customer, you will see a marketing campaign geared towards getting you on and using our free program and using our free platform to set up trade instances.
We hired Terrence and Phillip to do the campaign for Canadians. It's going to be amazing.
Yeah. So
don't tell me, buddy guy. Hey, guy.
We're live with that right now. So if you are a Kraken customer and want to use our software, please reach out and we'll get you set up. But then we will be launching in the States here August 1st. So exciting times over at Arch Public. We got lots of stuff going on.
Todd loves SUI like Sloth loves junk. Sloth loves junk. We all know, obviously we all know the Goonies here. It's a great comment. Incidentally, probably the best South Park was the one with the Canadian royal wedding. Did you guys ever see that one?
I'm not a South Park guy. I missed that.
God, man. Oh, God, we're not going to talk about that. All right. Anyways, but okay. So you can harvest this SUI volatility, obviously, to increase your stack there. And the proof is in the pudding. I mean, it literally, people are doing this every single day and talking about it. You should really get Terrence and Phillip to do your ads for Kraken, like the cartoons from South Park. You might not know what that is, Tillman, but trust me, it's the funniest Canadian joke there is of all time. So how can people sign up here? We got archpublic.com.
Yeah, go to archpublic.com, click on our get started free, and you can download our software and start trading.
Andrew, any thoughts here?
Exactly what Tillman said. Go to the website and listen. This tech that we've built, we want to make it free to everybody, and we want everybody to experience it. We want people to experience, buying when something goes down in the middle of the night, and then when it top ticks, they're selling when emotionally they wouldn't be able to do either. When people have that experience, it dramatically changes the way that they evaluate trading in our tools. So yeah, we make it free to everybody, and love to have you as a customer.
I was about to bring up Terrence and Phillip. I had the YouTube up there, and then I realized I already have one warning, and if I get one more warning, I'm gonna get a strike, and then I'm gonna get banned.
You're gonna get striked for copyright.
Which is ironic because it would be a YouTube clip that I'm playing to get my ban. YouTube bans you for taking something that's publicly available on YouTube.
Yeah.
Don't call me buddy guy. I'm not your friend, buddy. Yeah. Absolutely the best. Oh my God. Canadians are so funny. I'm going to leave it with that. I love you guys up in Canada. You're going to be happy with Kraken. Matt Siegel was amazing. Andrew Tillman. Thank you very much, Tillman. No more boating.
No more voting for me.
No, you're not going to do it. We need you. Too many missed Tuesdays because you're trying to relive your youth, glory of your youth.
Exactly. That's exactly right.
Can't do it. All right, guys. Thank you. We'll see you next Tuesday. Everybody else, obviously, will be back tomorrow. See you then. Thanks, guys.
That's dope.